Hello, welcome to FreeFX. I'm Francesco and the topic of today is going to be quite an easy one, really, because it's been quite a strange period for this major, and we really have to just decide, where to go from here. So, EUR USD is really at a fork in the road, and today's video is all about that. Now, I've been talking about this for a few videos now, and we're basically stuck between 117 and 118, and the obsession for somebody who is trying to do currency trading at home is trying to get a sense of where to get the edge from. And one of the things that one can look at is freely available data out there. It may not be an edge, but certainly gives you a way into thinking about things when we get to a crossroads. Now, you can't be an expert on everything. So here's EUR USD. Obviously, one of the things that we're thinking about is why are we at crossroads and this particular point. So I use a range of things when it gets to certain key points and there's either a lot of movements or there's not much movement at all. Try and gauge technical indicators or technical data that really allows to shed some light as to what layers are added onto the possibility of a range-bound environment continuing or a resumption of a trend or a correction if there's a change in direction of the trend. And one of the things that I do is try, first of all, the things that I know, and then go and look at things that I don't know much about and try to really dig some new information. So, and it's never really the same information that I look at every single time. If a currency pair like euros sort of currency of any kind is happily trading in a direction of a trend, one might look at sort of the strength of that trend, but is maybe content with following that trend rather than trying to question it too much. When a trend is overextended in some way, historically, then one starts to worry when trading it and wants to know where it might stop and looks at different ways to get that information. So let's look at where we are at the moment. So I've done something here which I can't actually overlap, so I put them side by side. On the left hand side of the screen, you'll see the euro-dollar exchange rate. On the right hand side, you'll see the euro area interest rate. We are at zero, have been since 2016, and close to zero from 2014/15. So it's been a good sort of 5 years of pretty much 0% rate environment, and that doesn't account. It's not even the real rate because it doesn't account for inflation, etc. So, and if you look at the start of the screen, that's kind of 2012 here and 2012 here, you can see that when the rates started getting slashed around 2014, close to zero, the euro really dropped significantly. So I could solidly say that this is, to me at least, visually, an impact of the exchange rate depreciation on the single currency. What happened thereafter, though, is decoupled from that because there's a two-year period here where it ranged for, it's sort of 1,000 pip range overall, but obviously there are troughs and peaks. Overall, it sort of ranged, you could say, between 105 and 115. And during that period, sort of 15, 16, 17, there wasn't really much movement on interest rate, as you can see. But obviously, other things happened. In 2015, the QE program was launched, and therefore the effect of that was at first negligible, and then there has been a movement in the ECB QE program, and other things have intervened. But so what I'm trying to say is that the European Union interventions, the ECB interventions, For example, if you take the pandemic program at the moment, it's a mixture of the central bank under Lagarde and the European Commission, and so it's not just a one sort of side of policy. It's fiscal policy, monetary policy, and political decisions. Then you have things like European versus US data. Then you've got European versus US currencies, etc., etc. Now, so we can see, that it is worth looking at the data here. And of course, if you looked at other things as well, like what's the impact of, for example, employment. So if you take employment and sort of put that on employment change. Okay, so in black you see the employment in the last 10 years in the European Union, and not the Euro area, but the European Union. You can see it fluctuates, and it goes higher, and it kind of stayed between 0.2 and 0.4 for about 5 years, and it kind of dipped with the sort of recent, it's not even coronavirus this, because it's actually before, so I'm not really sure what happened there, but anyway, so it's fairly steady within that. And if you compare that to this period, for example, from 2015 2017, like 2 years basically, you can see that employment rate is pretty much similar. So the QE program hasn't really had an impact on the employment rate per se. That's something that is more down to member states providing policy for that. Anyway, I'll cut it short. So let's just kind of go back to this and say that you can look at different things and try to find a key or more than one key that you can put down to as a driver for the euro side of EUR USD. Because the other thing is that, of course, when it's a chicken and egg situation, what comes first, the chicken, or what came first, the chicken or the egg? If we took this out for a second and went back to, I was reading about the PEPP, but it's a long and complicated story, so I'm just going to leave that and go back to this. Okay, so this is the Euro USD chart. Now, I've done this channel before, if you kind of follow my videos, and I've done it years ago and then came back to it and extended it because it really came true in 2015, and there was bounce here to this level, which was an extension of these two kind of joining into a line. And if you extended it, and then it came to these kind of levels here in 2015, after 5 years, essentially 2010 there, and then it bounced up, and then so we are again at this kind of join. This is a confluence of different things. I talked about fib retracements before over this very extensive period from 2008 to 2020. So over 12 years we have both a massive channel forming, and of course, with hindsight it's great. Obviously nobody has a crystal ball. This could have continued higher, this could have continued lower, and gone flat. And also the fib retracements, this is a fib retracement here, the next one is here, and actually they kind of marry with where price, the close kind of touches on the upper bounds of the trend channel. So we look at this and we know that we are at 118. We've kind of been there now for a few days, kind of trying to get out and in, and we were at 118 before, if you remember, in August 17, and we came back above it and then below it, and so it's basically like 3 years on, we're back there. Okay, so again, it is an important level because of this bounced off it and then finally breaking through, and that took about 3 months, more or less. Another thing is that I'm looking at this as a crossroads, a fork in the road. So either this can continue higher, hence the title of my video, or come back down. And it is got a steep rise, just like we saw here in 17. And we need to decide what is the steep rise for, where is it going, etc., etc. Now, 118, if you look back along this line, you'll see that it was a great support here in 2005, late 2005, 15 years ago, and that rocketed the euro all the way up to these insane levels at 157. Okay. Now, I'm not promising anything. I mean, it would be a dream. And also, if you go back to 1998, we're also just over 118, or 118.50 actually. So if you do your maths, 22 years, and then resistance there, 2003, 2005. It's almost like this level is an important level historically. But you know, that's history going back a long time. We are dealing with now, obviously. So, but even so, there's a long trend channel here, which we are at the top of. So it is likely, if this is maintained, that we'll drop down at some point below it. But I'm not saying it's definite. We have touched 119, but we retreated from it. So it's really hard to know whether it will continue higher. So what other factors can we put onto this so that might guide us to where we're at? Well, when I talked about the USD side of things for the euro, well, here's the DXY, so the US dollar index. It's heavily weighted on the euro USD interest rate. Exchange rate. So essentially, as you can see in orange, the DXY or DXY is pretty much exactly a mirror version of the euro USD. Okay, because they're so heavily correlated. So this doesn't add much to the picture. It's just basically one is a reflection of the other. Again, chicken and egg situation. What comes first? What is causation and what is just basically a result of something without really causing it. I think this is not really helpful. So I'm just going to hide it and we're going to show you something else. And then I started thinking, well, what is the largest banking corporation in Europe? Not necessarily European, but in Europe. And it's the Hong Kong and Shanghai Banking Corporation, HSBC. And then I brought up their graph, and here's the price close line in light blue. There's a strong relation there, correlation with Euro USD, just the general movement. I mean, just visually, and has been a big divergence here since December of 2019 and the start of COVID, and the euro's gone the opposite way. Now, we could say almost at a historic kind of point here, because if you look at HSBC value since 95, when the graph starts, we are exactly pretty much at the same level. So here's my thinking. Now we could take this and say, technically, for whatever reason, these two have been moving in sync, more or less. Let's say even for the last 4 years, from 2016, or last 3 years, from 17, etc. And they've diverged, and they're both the critical levels in opposite directions. So the euro is at this level that we talked about, and HSBC is at an historic low, going back 15 years. So the thinking here goes that whatever is causing the movement in one of these, whether they are related to each other or not, whatever chain of factors and reactions have taken place throughout the history of these two graphs, if we saw some kind of movement in opposite directions, kind of converging, like mirror versions, then it might be an important key So I will actually keep this in my sights because it might be important. Having said that, it's also enough to just say that there's a top of a trend channel here going back 12 years, and there's a confluence of Fibonacci retracement, and that we could even put an RSI and say it's overbought, etc. So I think this is likely to correct lower, and whatever happens to the HSBC price. Okay, so my last point really is price points and open interest on options. So we've got CME open interest heat map and volume as well. So here are the three bands. Essentially, there's the September expiry, December, and then March expiry. So you can see further down the line of time how things develop and calls, so your buys and puts, so your sells. So we're 118. Okay, interest is strong for calls. So 2,387, and further down the line it actually diminishes. Okay. Selling, so puts are pretty meager, pretty small. 118.50, interest is pretty strong, about the same, 2,361, and it kind of diminishes in time. And for next month's expiries, 2,768 at 119, and it's almost as strong at 120. So it's a bit weaker at 116, very weak at 116.50, very weak at 117, 117.50, but essentially there's still confidence that the euro is going to pick up because 118, 118.50, and then it's strong at 119 and pretty strong at 120. And it's also strong at 120 further down the line in a December expiry contract. So what I'm trying to say is that this, I think, is almost the flip side of the fact that we are at quote-unquote overbought levels. We're a confluence of a channel, Fibonacci retracement, and we've got all those things against the euro continuing. However, the options open interest heat map suggests that there's a lot of interest in buying at these levels, 118, 119, and 120. So again, we're at a crossroads. There isn't a magic solution to making decisions here, so please, if you trade, don't bet your house on a reversal from 118 because it may not happen. It may actually not be the case. So thank you very much for watching, and I'll see you in my next video. Take care.